Hello everyone, welcome back to the channel. We made it through 2020. COVID is still strong and prevalent, and it doesn't seem like it's going to get any better. So it's been 9 months of having COVID out there. Everybody's wearing masks. A lot of the places where I work or people where I work with are working from home, and yeah, things are definitely different than they were a year ago. So but we will get started with with income for this month. So for December, it made $7,312. I took the new position at work, so I'm now a senior supervisor in charge of about 12 people at another site. So my income has went up pretty substantially, about $13,000. So that is nice to see. But for taxes, paid $1,400 in taxes, $800 in my 401k, 365 in the employee stock purchase plan, and then I took home 4,721. For my wife, she does not get paid in December's at her main job. So she works for a university here locally, and then she does some adjunct teaching for some other universities. So she worked both jobs, but she'll get paid twice in December or in January. So she made $500 with the adjunct teaching, $95 in taxes, made $404. And then this was the month I discounted both rental properties rent $300 a piece. And so I didn't make $600 basically in rent. So that's why you see rent so low. I think as long as my tenants continue to be good tenants, I will probably continue to do this in the future. Both of them reciprocate. I mean, they like were ecstatic basically. They've never had a landlord ever discount their rent for anything, and so it really seemed to make a big difference with both of them. So I think in both cases, they're now going to be able to get their children more Christmas presents, or Christmas presents in general, where maybe they would not have before. So yeah, I'm pretty happy that I could make that change in somebody's life. So no other income this month, but gross income was 9,578, and take-home pay was 5,130. Yeah, so for the year, I did pretty good. I'm still not back to where I was in 2018 when I was working crazy overtime, but I guess I will be for 2021 because my base salary will be 86,000 plus bonuses. So I should be pretty close to $90,000 next year if I were to guess. I finished the year out with 75,353, and then I didn't quite max out my 401k, but I did get pretty close. I'm not too far away, maybe $5,000. We maxed out my wife's HSA account again, and then didn't quite max out her 403b, but again got pretty close. So I can't complain. I'm pretty happy. We had to switch our strategy in May and start contributing more to our 401k. So if we probably would have done that earlier in the year, I think we could have maxed them out. But again, I'm not gonna be upset about $5,000, $10,000. So we got pretty close, which is good to see. For my wife, she did awesome this year. I mean, she went from $46,000 to $63,000 this year. Just craziness. So last year gross we made 118,000, and then this year gross we made 100 and almost 61,000. So that's a pretty good increase, in the grand scheme of things. So I have to be pretty happy with that. That's really the only notable thing, I guess, for rental properties. I bought the first house in December and got it rented out early December, and then this whole year, I mean, up until July, I had the house number one rented out each month, and then house number two, I purchased and got it rented out. And yeah, so next year, I mean, we should be somewhere around $28,000 in gross rental income next year, assuming I don't have any turnover and each of the tenants pays on time each month. So yeah, definitely doing a lot better. Especially, I like this strategy a lot more than what I did back here in, let's see here, like 2016. So back then, like this month, I had 3 apartments all rented out, and each of the apartments were like $400 to $500 a month. It was a house that was not in the nicest of areas, and so yeah, it was a lot to manage. Not people not paying rent, people doing drugs, and just things I didn't really want to get involved with. So now, almost one property. The first one rents for 1,200, and the second one is 1075. And so almost one property makes what those three properties did before, but the expenses are higher, and there's pros and cons to each of that. But I'm pretty satisfied with what I'm doing. I think I'm going to keep looking for houses in the area that I live in, which are what both of these houses are, and then hopefully some more houses come up in the future, and I'll just stick to like my close knit zone, the neighborhood, not the neighborhood, the town that I live in, and try to just keep buying houses in that town. Um, yeah, nothing else with other income. We didn't really sell any houses this year. It's been a couple years since we sold the last house. But we just got the one COVID stimulus check, which I don't really feel like I should have got, but that was really it for other income this year. Um, Jumping into net worth though, for December, all the houses, of course, went up in value. I'm just having them go up 2% per year. So I just have an equation up here that takes 2% divided by 12, and so each month they go up 1/12 of 2%, just to make it a little bit easier, so I don't have to look at Zillow all the time. And honestly, I should probably talk about that. So Zillow right now says house number 4 is worth like 337,000. So at some point I may have to adjust. I'm going to see what the next 3 or 4 months hold, and then I may have to adjust house number 4 up, maybe to 325 or something. But yeah, Zillow's saying 337 currently. For house number Sorry, that's for house number 4. For house number 5, Zillow's somewhere around like 157, so I don't think I'm super far off with that one. And then I'm going to skip house 6. House number 7 is like somewhere around 155, 156. So again, I'm really not super far off with that. I think it's just house number 4 that is increasing in value pretty fast. House number 6, I should probably talk about. So house number 6, I bought at the very beginning of this year. It's a pretty crazy story, honestly. The grass at the house was super tall. There was a for sale sign in the yard, so like the people driving by couldn't see the for sale sign because the grass was so high, and it was a small for sale sign too. Like it wasn't even a normal size one. So I drove by, called the person that owned the house. That was their number was on the for sale sign. She came and met me, and we ended up settling on $20,000 cash offer, close in like 14 days. And yeah, it worked out. It worked out pretty good. And so I was thinking the strategy for house number 6. And so like option 1, I could buy the house for 20,000, probably put 100 to $120,000 into the house. So I'd be maybe $140,000 all in, and then I could maybe sell it for 170 to maybe 180. The house next door sold for 180, so that's where I'm getting my comps at. So I would spend 120 plus 20, sorry, 140,000 to make 180,000 or $40,000 in profit. So it seems like a lot of risk. Basically, all of my cash I would have to tied up into house number 6 to get it to a $180,000 sale price. And so I was thinking, like in my area, there are not very many houses that are like flippers, like flipper house. I mean, there are houses that are completely destroyed and stuff like that, but they don't come up for sale very often. And when they do, they're like 140,000, 130,000. Like they're extremely expensive. And so it doesn't even really make sense for a flipper to buy it because there's no margin there. And so I was thinking, okay, with house number 6, maybe I can sell house number 6 to the flipper audience or to the flipper market. And I'm going to hold it for a year so it moves into more of like long-term capital gains versus short-term capital gains. But so that's kind of been the plan. I bought it for 20,000. I am fairly confident it's worth 40,000. My goal is to spend $0 on the property, maybe $300. I need to buy a dumpster to get rid of some trash, but that's really about it. And so far I have spent $0 on the property. not counting mowing and stuff like that. I mow the property and there's gas and labor and stuff that goes along with that. But I've not spent like I've not put up drywall, I've not done insulation or paint or anything like that. I've just deconstructed house number 6 and got it down to studs, so that way it will be marketable to the flipper audience. And so my game plan is to sell anywhere between 50 and 60,000. And so I'm hoping that a flipper comes along and they're willing to spend the 80 to $100,000 and maybe sell it for $180,000 and then get a $20,000 wedge there. But we'll see. We'll see what happens. I keep checking the market in my area, and there are no houses out there, whatsoever that are really flips. At least, I mean, flips for less than 50,000 or 60,000. So I'm hoping that that goes well, but I probably have another 6 months, honestly, before I finish deconstruction of the actual house. I am working full time, and I've got a lot going on at the moment, so I'm kind of making excuses. It's been taking me a year. It's a big project. I also don't work in construction, and I can't build a house with my bare hands. I can do some renovations, the simple stuff, but I'm not an expert, tradesman or carpenter or anything like that. So I'm not super efficient with things, but I keep at them and do the best that I can. So that's kind of the story with house number 6. So probably, the goal will be that's the first goal for 2021 is to sell house number 6. I'm hoping, somewhere between 50 and 60,000 is probably the goal. And I'll make a $30 to $40,000 profit off of that and then have no money in it. So basically, the outcome is the same. I make $40,000 whether I would have put 100,000 in it or $0 in it. So I'm going to take the less risky approach and put $0 in it and sell it for 50 or 60,000. So that's the game plan. No changes with any of the vehicles. Those are all pretty much staying the same. I did open M1 Finance in October, and so that was purely because I'm sitting on a ton of cash. About 20% of my net worth is just sitting in cash at the moment. Was sitting in cash as of October. And so I opened M1 Finance, and the goal of this account is just pure value and dividend stocks. I'm not trying to do anything crazy. I'm just trying to limit the downside and make sure I don't lose a bunch of money, and then make some dividends along the way. So I'm slowly dollar cost averaging in there. Over the next like probably 6 months, this cash position will all just flow into M1 Finance here. For my wife's 401k or for my wife's HSA, we have her HSA through her employer, but it's technically our HSA. Kind of a wild ride this year, almost doubled from last December to this December, from 15,000 to 27,000. But yeah, we had an interesting year. We pretty much had a crash in March, which was probably the biggest crash that I've seen in my adult working lifetime. And then just a super quick rebound for the rest of the year, just skyrocketing up in price everywhere. So the story's kind of the same. HSA was at 15,000 in March and is up to 27,000. My 401k was at 53,000 in March and is now at 102,000 in December. And I should explain that a little bit. So it looks like I had a decrease last month from 104 down to 102. That's not exactly accurate. I had about $9,000 that was just in not a traditional, a tax deferred account or just like a brokerage account. I'm not with a 401k, not in an IRA. And so I moved that $9,000 out of this is just my Fidelity account. It has my Roth IRA in it. It has my 401k in it. So there's a couple different accounts in this here, but it's mainly retirement. So I moved $9,000 from there into M1 Finance. So it was actually probably up, I mean, $8,000, $7,000 roughly this month. And then I put $10,000 more from my checkings account. Is that right? No, $5,000 more, sorry, from my checkings account into M1 Finance this month. For my employer, my company stock, again, it's skyrocketing. Next month as well, I'll probably get another, let's see, probably another $4,000 to $6,000 in company stock. So I was awarded, I'm not sure how many shares of my company stock, but it vests over 4 years, where each year I get 25%. And so each year it's about $4,000. So as of January, it'll probably jump up to over 20,000 is my assumption. So but my company stock did phenomenally. I've not really explained too much about myself in this update here, but my wife and I are currently 26 years old. I work for a pharmaceutical company here in town. I've worked there going on 3 years now. And then my wife works for a local university and then does some adjunct teaching. And then obviously on the side, I do some rental properties as well. The pharmaceutical company that I work for, it's kind of, it booms and then it busts. When there's pandemics going on, it definitely booms. And, the pharmaceutical industry hires thousands and thousands of people to keep up with the demand, getting vaccines out. And then once stuff goes away, they inevitably, fire everybody. Not everybody, but probably 50% of the workforce. So, it's just part of the risk of working in pharmaceuticals, I would say. I worked through the Ebola and swine flu at my first pharmaceutical job back in like 2014. Um, it did the same thing. I mean, they hired 600 or 700 people, and then as soon as those things went away, they started firing everybody. So right now, I mean, we're in the midst of COVID. My company stock is making a ton of the COVID vaccine for multiple different companies out there. And yeah, so our stock price, a lot of it's public knowledge too. It's in the news. And so we've had some pretty important people come to the facility that I work at, and then congratulate everybody for their work and the overtime, and what they're doing for the United States and for the world, I guess. But our company stock is just it's been skyrocketing for the past. It's probably doubled in the past year, which is it's pretty crazy. I think it still probably has a little bit more room to run. We're not super overvalued. It's a relatively small company. It's definitely not in the top 100 in the S&P 500 index, but um, it's just going to depend how long COVID lasts. And I'm aware of the risks. And so just depending on how my employee stock purchase plan does and how the stock does in general. If it gets to a point where I feel that it's overvalued and I can't see it growing any further, then I will sell out of a lot of my employee stock that I have and just diversify it into other things. I don't want to be 10% of um, my investment portfolio is in one stock, and so right now it's about 5%, and I'm comfortable with that. So I'm not super concerned with it. So for now, I'm going to let it go, see if it runs up a little bit more, and yeah, just go from there. For my wife's 403b, which is essentially the same thing as a 401k, it's just a different like nonprofit or educational institute. So basically, think of it as a 401k. Hers has pretty much done the same thing. Hers is in three different sector funds and then like 10% in an S&P 500 index fund. So hers was at $39,000 in March and is up to $80,000 in December, which is just absolutely crazy. So investing this year has been a pretty wild ride. I'm glad that I have the philosophy that I do. So I started the year out, 123,000 and then went all the way down to 114,000. A lot of the people that I work with, friends and family, they were selling out of a lot of their positions at the like absolute worst possible time. And then a lot of them didn't get comfortable with buying back in until like November. And so they missed. I went from 114,000 to 254,000. So I think I'm going to keep the same philosophy. It's a pretty boring philosophy that I have. Like I know that I'm 40 years away. Maybe I'm going to give myself credit, 39 years away from retirement. And so yeah, I don't really need the money. And so what's really the point of buying and selling? I'm just going to keep putting money in there, keep dollar cost averaging. If it goes down, great, I buy more at cheaper prices. If it goes up, that's kind of unfortunate because I would rather it go down, that way I could buy for cheaper. But I'll just keep dollar cost averaging in. But if I would have sold in March, I would have lost probably $100,000 this year if I would have sold out there and waited until the end of the year to buy back in. So and just incredibly thankful that I did not make any rash decisions like that. So that lesson there will probably influence me, going forward. It's boring, like just keep putting money in this account, but hey, it works. So up $140,000 just this year. So that's awesome. The debt portion is a little boring. I bought house number 5, house number 7, house number 5, late last year, house number 7, middle of this year. And so I don't, we paid off all of our credit. Well, we've never had credit card debt, but we paid off all of our cars a couple years ago. And yeah, so it's just focusing on houses now, which really isn't a primary focus of ours. These are all 30-year fixed rate loans between like 3 and 4%. So the goal for us is just to make minimum payments. 2 of these are rental properties, house 5 and 7. House number 4 is the house that my wife and I live in. And so, yeah, and we're just going to keep making minimum payments. I'm trying to find the balance though. So we owe 421,000 between those 3 houses. And then I have $642,000 in real estate. So it looks like I have $220,000 in equity. So I'm about a 66% debt to equity ratio, where 66% is debt and 33% is equity. So even if we had a 20% downturn in real estate, I'm still okay. I still have upside on all of the houses. So yeah, so I'm comfortable at the moment, but just something that I'm keeping an eye on. I don't want it to get to like 90%, debt to equity ratio, which would be impossible unless I refinanced or did something crazy or bought another house like with extreme leverage, which I don't plan on doing. So yeah, debt's pretty boring. For cash though, cash is just slowly going down as I move money into the M1 Finance. That's probably I would say number one issue is just having too much cash right now. I'm 102,000 in cash out of $655,000 net worth. And so, the goal of mine is just to move more into M1 Finance, where if I need to, if a crazy house deal comes up, then I can liquidate some of the stocks in M1 Finance, use that money to put the down payment or to pay cash for a future real estate deal. But for the time being, yeah, just I'm slowly bringing cash down and moving it into M1 Finance. But yeah, okay. I thought I didn't update the rental amount here, but it looks good. So rental checkings account has also done really good. At the beginning of the year, I had $1,300 in there, and I'm now up to 11,724. So it's the real estate is really doing good. I would honestly prefer real estate over stocks to where I make the monthly rent, and so each month, each house, like I profit about $500 in cash. I'm able to save up about $1,000 every single month in the rental checkings account, depending on what repairs and maintenance that I have. But then I also can pay my loan out of that and pay down my principal, which for each house is about $150 a month. So there's $300 a month I'm able to make in principal pay down. And then it looks like each month too, I make about $600 in appreciation. So 600 plus 300, 900. So each month I make about $2,000 overall, not counting the tax benefits of owning real estate. That yeah, that helps with my net worth. So that's kind of key lesson number one for 2020 is the real estate seems to be working incredibly well. It's not as linear as what the stock market is, but it's I would say just more consistent. Where each month that you have a guaranteed, like you're gonna have $300 in principal pay down. You're gonna have $600 in appreciation, roughly, if not more than that, and then you're going to make that roughly 300 to 1,000, maybe 500 to $1,000 in cash flow from real estate coming in. And so, and I have more control over it as well, which is my preference. But in the future, I would like to move more into real estate if possible. Again, just trying to find the balance between the real estate and the debt. I just don't want to get carried away with debt. But yeah, so as of December 2020, my net worth is $655,253, and I'm $196,000 ahead of my goal pace of becoming a millionaire by the age of 30. So I have about 4 years left to go, maybe 3.5 years left to go before I turn 30 years old. I think it's, yeah, 4.5 years, sorry, left to go. And so I have a little bit of time left. I was honestly nervous as, when I was giving this update last year. It just seemed like a long way to go. But I went from 432,000 to 655,000 just this year, even with a small recession here in March. So net worth increase was $223,000 just this year. So almost $20,000 a month on average is, kind of the pace that we're at. Um, It's kind of crazy to say that. 8 years ago, it was like if I could save $100 or $500 a month, it seemed like a really good month. And then now most of these months are $20,000 a month. So really cool to see. I feel like the compounding effect is definitely starting to go in effect where you see some of the efforts that you had put in previously start to compound and work for you, and yeah, just get greater and greater. So I guess the goals for 2021, I probably will not have any job changes. I just got the new job in December, and so I don't anticipate, um, you know, where I work, it's like the first level of management is supervisor, and then it goes manager, and then it goes director, then vice president, and then CEO. Is kind of how it works at the industry that I work in. So usually to become a manager, it's probably 3 to 5 years experience at a minimum as a supervisor. And so I probably don't see anything in at least the short-term future of moving from supervisor to manager. So I'm probably all of 2021. My guess would be I'll probably be a supervisor that whole year. But the goal is just to get my new facility up and running and hopefully get the team hired on and processes in place and making progress there. But the new income will be great. So another $13,000 in income that I'll make. Again, I'm salary, so I don't get paid for overtime. But in this new job, I don't really think I'll have to work too crazy of overtime. But yeah, so other than that, I think the only other goal for next year will probably be to maybe do a little bit better about putting money in 401ks. If possible, max out my 401k. I think next year it's 19,500, and then for HSA, I think it's 4,600. So both of the contribution maxes go up a little bit. I'm gonna so I think efficiency is one thing too. And so I'm putting money in traditional 401ks, traditional 403bs. I'm going to see if there's any other things that I can tuck money into, just so I don't have to pay that money in taxes. And so I'm perfectly fine paying taxes later in life. I don't think we'll live a lavish lifestyle and spend $500,000 a year or anything. So I'm fine paying taxes later in life, personally, and saving on taxes now to help compound the portfolio even faster. But I'm going to see if there's any other, tax advantage locations that I can put money into. My wife may have some other stuff that she can do with her nonprofit educational, category at her work. So yeah, so something to look into, but definitely another goal for the next year is just to do better about maxing out retirement plans, which doesn't sound super thrilling, but I guess the proof is in the pudding. It seemed to work pretty well for the past couple years, so I'm just going to stick with that strategy, and yeah, and if anything better comes up, then we may switch that. So. But yeah, so net worth as of December 2020, $655,000. So I'm $345,000 away from becoming a millionaire. So I don't know if 2021 I can hit that. We saved a little over $200,000 this year. So 350 seems like an awfully big stretch. I have the suspicion, unless we have a big downturn, I think it will be somewhere between 28 and 29 years old, so a couple years away. We're way ahead of schedule, almost $200,000 ahead of our goal pace. So that's great to see. We'll just keep pushing forward, keep working, and yeah, try to hit that number as fast as we can. So thank you all for watching the video. And be sure to like, comment, subscribe. Last month's, next month's videos are on the screen now. And as always, if you have any questions, comments, things that you'd like to see in future videos, just comment them down below. Thanks everybody, and we'll see you in 2021.